In today's video, I'm going to be doing my first ever Q&A session. Thanks for visiting my channel, Free Your Finance. My name's Gary and I talk about investing, property and financial independence. If this sounds like something you may be interested in watching a little more about, please hit the subscribe button below. So as my channel is growing, I'm getting more and more comments from you guys across all of my social media platforms. Sometimes they're just comments of thanks and great words about what I'm doing, which I appreciate so much you don't believe. And then sometimes I do get questions sent to me too. What I plan to do in today's video is answer some of those questions that have been brought up over the last couple of months. Before I go any further, it's important for me to say this is not financial advice, nor will I recommend you towards any funds or any sorts of platforms. I cannot do that, and I suggest you go and get the help of a professional financial advisor who can help you with those things. The next Q&A session I'll be doing is going to be on all questions buy to let. I've been a landlord now for almost 12 years, so if you're interested in finding out any more about buy to let properties, please do leave a comment below with your question in the comments box. In today's video, I'm going to be going through questions that I've been asked that are based around stock markets and the index investing that I'm involved with. Okay, so first question I've got is, hey, I'm new to your channel and I just wanted to ask about the cash that's held in your ISA with Vanguard, if that's okay. You mentioned that some of your funds pay out dividends and it goes into where your cash is held. I got confused. I thought indexes accumulated and went back into the fund it come from, if that makes sense. Sorry, I'm new to this and I'm trying to learn everything. Many thanks for your channel. So first of all, you're absolutely welcome and I hope some of the videos have been helpful. You are absolutely right that some index funds are indeed accumulation funds. This means that any dividends earned are automatically reinvested into the fund. There are such a thing, however, as income funds. Now these funds actually pay a dividend at an agreed timescale. Often with funds this can be quarterly, and once you receive that dividend it will be sitting in your account as a cash amount. Now unless you invest this, it will stay as cash. It won't automatically reinvest. You can then choose to reinvest that into either the same fund or potentially a different one. It's that actual dividend, whether or not it be in an income fund or an accumulation fund, which introduces what we know as compound growth, which is obviously the exciting thing about index investing. An example of an accumulation fund that I invest in is the life strategy funds. I hold the life strategy 100 in my SIP and I know that's an accumulation fund. And an example of an income fund is VWRL, which is the all-world tracker that I use in my ISA. I hope that helps. Next question I've got is, to buy an ETF, is there a charge apart from the normal managing fee that you pay? So again, it's a great question. Thanks for asking. So to answer your question, is going to depend on what platform you're on. I can only answer for what platform I'm on. I'm with Vanguard and I get charged no fee as long as I'm not trading at live prices. I have to buy at the next trading point, it's called. If I bought at the live prices, there's a trading fee of £7.50. I know you've mentioned in your question you know about the managing fees, but just to confirm to all the other viewers that you will get charged a fee for holding the fund, which is known as ongoing charge, and there's also possibly going to be a platform charge too. With Vanguard this is 0.15%, although it is capped at £375 maximum payout per year. This dealing charge was actually the reason that I moved away from my first ISA provider, which was AJ Bell, as I got charged a transaction fee every time I made a purchase, whereas Vanguard didn't charge me for my regular purchases. Next question is, when will you be putting your quarter 3 update? Really keen to see how it's going. Thanks for all the great content, mate. Really valuable. Again, you're absolutely welcome. Thank you for watching. The quarter 3 portfolio update was actually the last video that went live, so you can go and check it out on the channel now. I was quite amazed at just how well the portfolio has done over the last 3 months. Next question that I've got is, a great video and your portfolio is looking good. Just a quick question, is the cash holding you have within your stocks and shares ISA or a cash ISA? I have a stocks and shares ISA with Vanguard and I previously inquired whether I would receive any interest on the amount of cash I had sitting in the ISA and they said no. So I was wondering how you managed to get 1.52% return on your cash. Thanks and keep up the great work. You're absolutely welcome. And to be honest with you, I'm as confused about this one as you are. Originally, I looked at my sort of statement and I saw that my cash had been earning me interest and I was really confused about this. And I actually thought there was an error. And I sort of wrote a message to Vanguard sort of saying, oh, what's going on guys? I really need these figures to be accurate. And I got a reply from them saying, no, this is correct. Any cash that is sitting in your account is paid a 0.5% interest. I can't comment on the details that you got given, but this cash is definitely sitting within my stocks and shares ISA, as that is the only type of ISA I currently have open. So maybe it's worth contacting Vanguard again. Maybe it's something that's been changed quite recently. So next question we've got is a good video. I have started investing in Vanguard around the same time last year. Regarding the Vanguard products you have you considered looking at Life Strategy 100% equity fund? It is well diversified. They have allocated many of their other funds throughout the world. So to answer your question, I have indeed looked at Life Strategy funds. I do actually invest in one of the Life Strategy funds, the Life Strategy 100, in my SIP. I believe the Life Strategy funds are really, really great, especially if you want a fund to almost sort of set and forget. My slight issue with the Life Strategy funds is that I feel, for my preference, they're a little bit too UK weighted. I'm not going to recommend the fund, of course, as I can't do that, but I definitely suggest you do some research up about the Life Strategy funds, and I actually made a video explaining a bit more about the funds. I will link to that in the top corner of this one. Next question was a great video and content, Gary. If you've already invested in a Life Strategy fund, do you think it will also be a good idea to invest in individual ETFs to gain more exposure to certain markets? Again, please note this is not financial advice. If it was me, I certainly don't think it'd be a bad idea to invest in a certain market that I wanted more exposure to if I didn't believe that the Life Strategy fund had the weights at how I wish they would be. So for example, in the last question I said that for me they're too UK weighted, so maybe I'd buy some sort of a Europe fund that excludes the UK market. Again, this is my opinion, so please don't take this as financial advice and do what I say. By no means am I an expert. But to answer your question, from my opinion, yes, I don't think that's a bad idea at all. Lots of people like the Life Strategy funds as they can have a one fund portfolio, which is quite attractive to people, sort of, especially people that don't want to get involved too much and set and forget. But of course, this is all down to our personal risk preference and what we're looking for from our portfolio. Next question is, brilliant job. Where were you 30 years ago when I had money? Keep the videos coming, please, Gary. Thank you very much. And I was just come out my mum's belly back then, so I wasn't around for long. But the reason I left this sort of tongue-in-cheek comment in is I know it's not a direct question, but I thought it was really important to say that with sort of financial independence and just sort of financial security, it doesn't matter when we start, really. It doesn't matter if we've got only a couple of years till retirement. The important thing is that you're sort of getting control of your finances and you're thinking about your later life when you're going to potentially need this money more. Even if we don't actually reach a sort of financial independence number, the fact that we've still thought about things, controlled our expenses, thought about some savings, is always going to be a positive in the long run. Okay, so next question. Hi mate, I recently started investing and picked the Vanguard FTSE All Cap index fund. Can you let me know what your thoughts are on this one? So again, I know I've said this about 100 times in this video. I can't give you any financial advice as I'm not allowed to do so, but all I can say is I invest in that fund myself, and for me, I believe it's a good fund and I like it. By no means does that mean it's the right fund for you, so please do the research and make sure it suits your risk preferences, but I certainly believe it suits mine. Okay, so next question is quite an in-depth question, and it's probably one that's going to require its own video at one point, which I plan on making. But it says, can you add any insight with regards to buying an index fund on a regular basis to average your position, and what happens when you sell that part of your position? Thank you for a great question, and to be honest with you, you've inspired a whole new video which will be coming. But just to give you a quick answer to the question, I do exactly this. I call it dollar cost averaging. Some people here in the UK actually call it pound cost averaging. It's only because I listen and read to a lot of US based podcasts and books. Basically what I do by dollar cost averaging every month is I'm then averaging my position, as this user says in his or her question. What this means is as markets are going up, every time I buy, I'm actually buying at a more expensive price, which is obviously a negative thing to do. However, what it also means is when markets are going down, every time I buy, I'm buying at a cheaper price. This means that say I'm putting in £100 every month, that £100 as the markets are dropping are getting me more and more of that that fund every time I buy. This averages out our sort of risk to these volatile ups and downs. However, some people do actually say that mathematically you're best off investing in one lump sum if you can. This is because I forget the exact figures, but I believe the markets go up about 75% of the time. So the idea is almost sort of 3/4 of the time you're better off putting your money in as one lump sum. I do the exact opposite. I put in monthly, and the reason I do this is because I do it on the same day that I get paid from my company. If I had the money available as a lump sum, I'd certainly consider putting it in one lump sum. However, again, this is not financial advice, so do what suits you best. With regards to the part of the question about selling the position, I'm probably going to go through that in my video where I cover this properly, as to be honest with you, I don't know a lot about it as I've never sold any part of my position yet. I will be doing research for that video when I come to record it, but again, thanks for a really awesome question. Next question was, thanks mate, do you hold any bonds? Now, I do not hold any bonds. My sort of risk to the stock market is in 100% stocks right now. Overall, you've got to remember though, I am diversified in other parts of my life. So although I've got 100% in my sort of stock market investments in stocks, I do also own 5 rental properties, which obviously give me some of my portfolio in housing. I do also have quite a bit of money in cash. I also have a business too, which has quite a healthy balance in as well. So I do have still my fingers in many pies, so to speak. And then there's other smaller investments like peer-to-peer lending and things like this. The reason I'm currently 100% in stocks is because I am quite young in age. I'm only 30 years old and I've got potentially 35 years before I'm going to be needing this money. So my idea is to try and build up some accumulation of my wealth as fast as I can. This is obviously the most risky way of doing it, and it doesn't suit everyone's risk tolerance, so please do what suits you guys best. I definitely plan on introducing bonds one day, especially when I've got a much larger sum of money in my sort of ISA and SIP and things like that, and I will definitely be introducing bonds closer to my retirement age, but right now 100% stocks, so super high risk. But hopefully I'm going to get high rewards too. Next question was, wanting to start my index journey as I'm now 18, could you please guide me on what brokerage to go with and how many and which index funds to choose to invest in? Firstly, congratulations finding this sort of movement and path so early in life. You're going to be rocking it in a few years. You're going to be so happy you found it. Unfortunately, I can't help with any advice as I'm not a certified financial advisor. The only things I can say are things for you to think about with regards to keeping your fees as low as possible. This goes for both the platform and whatever funds you go for. I would recommend trying to diversify your portfolio as much as possible, just to make sure that all your eggs are not in one basket. And I'd also say try and just absorb as much knowledge as you can. There's so many amazing YouTube channels, podcasts, books, all sorts of things where you can really sort of dive in head first and learn a lot of this yourself. The final thing that I'm glad that I do is I pay myself first. So what I mean by this is the money leaves my account on the day that I get paid. So this money has gone from my site before I have a chance to spend it. This helps me personally to avoid any sort of lifestyle creep or anything like that, as the money automatically goes out to my savings and investments. I hope the answer still helped you a little bit, and again, good luck with your journey. You're going to be smashing it. And then final question was, hi Gary, really enjoying your content. Why did you choose Vanguard as a platform? Thanks. Firstly, you're absolutely welcome. I'm glad you're enjoying it. I chose Vanguard as my platform. I actually previously mentioned this earlier in the video, is I was with AJ Bell first. AJ Bell were great. I'm not saying that they're not, but they did charge me a dealing fee, and I was always planning on doing this dollar cost averaging that I spoke about, which meant that I was going to be charged every month that I purchased funds. This was right at the time that I was with AJ Bell. Obviously, please do research. Maybe they don't charge anymore, but they certainly did when I was with them. I found that Vanguard didn't charge a fee every time, a dealing fee, and I did also find that their fees for their platform and the funds were also slightly cheaper too, for the things that I wanted personally. The final thing I liked about Vanguard was the fact there's such a worldwide sort of real dominant force in this industry. I know it doesn't mean that they are invincible, but it certainly helps me sleep a little bit better at night that I'm with such a sort of global worldwide player. There are some really awesome articles online, so give it a search of like best best platform to use, and I'm sure you'll read some stuff. I think the Moneyvator blog, I hope I've pronounced that right, I think he's done a really great post comparing different platforms and putting some real life figures in and how they'll compare. So maybe go and check that out. I'm really excited to do the buy to let Q&A, and I've already shared it on my Instagram page and got some really great questions sent over to me that I'm going to be answering. So hopefully I'll see you guys on another video very soon. Take care.